Okay, we are live and in charge here.
Cool. Welcome to the evening buzz, folks.
Is that gonna be the? That's gonna be our daily intro now. I like it.
That'll be our daily intro. Get them fired up. Get them ready.
Get him ready to rock and roll.
Guys, my name is Paul Schroeder, and that is my co-host over there, the one and the only
Rod Davison from
Rod
Fresno, California.
There you go. Absolutely, and I'm coming to you from my home in Las Vegas, Nevada. And tonight on the evening buzz, Rod, we're going to help them get started in their business. What do you think?
No, absolutely. That's that's the first step in financial freedom is starting. So that's it's a really good place to start, and that's where we all had to start at some point, right?
Right, absolutely, absolutely. And guys, when we're talking about business, we're talking about anything really that you want to start from your home. Maybe you are a bang-up baker, or a butcher, or candlestick maker, or landscaper, whatever it is, or for your network marketing businesses. It's all really basically the same. Where do we start off? I guess we can start off with the entities, right?
Yeah, that's a good place to start. Is just kind of, knowing really where to start. So where's a good place to start?
Entities, absolutely. You need to, you know what? I'm going to do a quick screen share here, Rod, and show you just one thing that we've got here. Hold on, let me set this up. You got that?
We got it.
Cool. So the types of business entities, guys. In business entities, what we're talking about is an entity is it can either be you as an entity or someone else, but it's somebody or something that the IRS taxes. And so what it is, it's basically a way for you to be able to pay taxes. It's a taxable entity. So the first one, and the one that we suggest that most people start off with, is a sole proprietor, and a sole proprietor is simply you, right, Rod?
Yeah, I mean that's it's just yeah, exactly. It's just you. It's a single ownership, kind of the first entry point into a business, and they just call it sole proprietorship, and it's probably the least expensive and the easiest to get started because you really don't need a whole lot to start a sole proprietorship,
right.
company. So
you really just need to say, kind of raise your right hand and say, hey, I'm a baker, and I'm going to be selling my cookies and wares to people, and I'm in business. And you're immediately a sole proprietor, and you use your Social Security number if you're in the United States here. If you're in Canada, it's your Internal Revenue Service number. I can't even remember what it is from not being there, but basically you are using your own Social Security number as your tax ID to identify your business to the IRS. Now, we do recommend that there's some ways that you can make this look more like a business. And Rod, talk about what a DBA is just a little bit.
Well, a DBA is basically a doing business as. So, let's say for instance, my name's Rod Davison, and but I want to operate a business with the company name of I don't know, Marketing Pro Success or Secrets or whatever else there is. It could be the 101 ways to become a business owner. It could be anything. It could be a book title,
Right.
whatever. So that's pretty much a DBA. So you are the owner as yourself, and then a DBA is basically a doing business as some other name that you choose that that is basically it's a marketing or just a cool name that is very recognizable and kind of is really sticks in people's heads. So it's really nice to find something that's just kind of
works for whatever business that you have.
Yeah, exactly. And something that's catchy and stuff.
So just because you see a name on a storefront, guys and gals, or you see it on the side of a building, doesn't mean that's not just a single person that's running that store. Like I saw one the other day, Mathanasium, some store about math. So that really could be Sally Smith doing business as Mathanasium, and it's as simple as going down to usually it's your county office. They have a form that you can fill out, and here in Vegas, I don't know what it is there in Fresno, but here in Vegas it's like $20. It's really inexpensive, and that allows you to set up all of your business stuff like bank accounts and things like that using that name. So
yeah, gosh, I couldn't even tell you how much it was in Fresno because it's been probably since probably about 1990 something since I've been in that office actually. So.
oh, is that right? You don't have to renew every year? Well, no, you can do it online too,
Well,
correct?
no, because you don't have to renew every year. There is some years, but with the LLC, you don't have to do the fictitious name filing. So.
Right, right. So
And
that's really the easiest way, guys, to get up and running, get started. The sole proprietor, you just kind of basically, I state my name as a business owner. As we mentioned there, the DBA. Now, the IRS does not require that you have a separate bank account. You can actually run your stuff as long as you're keeping the right records, but probably highly recommend the separate bank account, right, Ron?
oh yeah, absolutely. I mean, it's just a lot easier to keep your accounting in check if you keep your personal and business, separate.
It can be a real mess, and then and again, it's hard. Part of being in a business, guys, is you have to prove profit intent, and you have to run your business like a business, and
Yep.
that shows that your intent is to, if you have a separate checking account and it's showing more your intent to operate as a business and profit. One of the things that I really like to tell people is that you have to operate like a business. Some people, if they think at all, guys, that this is a hobby, if you can't prove to them that you're running a business, then you're going to get into problems. So if you're going to run a business successfully, you got to run it like a successful business would be run, and separate bank accounts and all that kind of stuff is just the best way to do it.
Yep, absolutely. And I think we kind of covered it last night. There's really just three main things to technically state that you're a business, and what is it? That you got to keep good records. Again. Yeah. What is it?
Go over them again, Rod. Sorry, I didn't mean to interrupt.
Oh, that's okay. So basically, you just got to attempt to make a profit, and you got to keep good records, and now the last one,
regularly, and
yeah, that's it. And you got to work it regularly. So those are really the three main things to say that yes, I have a business. So
right.
Pretty
So
pretty simple.
Sole proprietor. Now, the one thing I will say about a sole proprietor, guys, is from a legal standpoint, you and your business are one. So if you're running a business that has a larger liability, something where someone might trip and fall, something where someone might sue you for malpractice or whatever it is, this particular entity leaves you the most open to any kind of issues like that, because you and your business are the exact same person in the eyes of the IRS and in the eyes of pretty much every court that I know of. Oh, and one thing before we get too far into all of this, Rod, folks, always, it doesn't matter where you get advice, whether it be on the internet, from your Uncle Bob, from the guy who runs your local bakery, or whatever it is, guy you're sitting next to at the bar, always check with a professional before you do anything. Always make sure you're checking with legal and accounting professionals to set this stuff up, to check on the information that you're getting, to make sure that you're applying the laws in the county, state, and country where you're doing business.
No, yeah, absolutely. I didn't mean to cut you off there, Paul, but that's definitely a good little tip, because as we get into the rest of these, I mean, it's really important to make sure these are set up right, and really to get a get an attorney or a paralegal or even like a legal Zoom or something to set these up. It's really pretty inexpensive in comparison to to the protection that it gives you for your personal assets on pretty much all of these other types of business entities. So.
Right, and the last thing we want to hear is or get a phone call or an email from one of you guys saying, "Well, Paul and Rod said, guys, this stuff." Again, I have set up businesses in the past as a sole proprietor, and Rod and I have both done our own LLCs. Setting this stuff up is really not that difficult, but you still, if you have the finances to be able to do it, and as soon as you are in that position to have the finances to do it, you should seek the advice of a professional to make sure that you've got your I's dotted, your T's crossed. Just recently, I was telling Rod earlier, just recently my wife and I just tweaked our LLC, and we're going to get into that here in just a minute. We tweaked it just a little bit, the tax side of it, and it saved us literally thousands and thousands of dollars a year. And because we just had it not quite set up right, and it was one form that we had to submit, and it changed everything. So always check with that. So I think that covers the sole proprietor, Rod, unless there's something else you can think of.
No, that pretty much covers it. I mean, it's pretty simple and easy to set up, and take you probably a couple of hours to really get your business started. Once you decide to do it as a sole proprietor, it's pretty
really
simple.
Pretty simple. Okay, cool. So the next one, LLC, that stands for Limited Liability Company, and there's actually LLPs and stuff like that, guys, but we're not going to get into all of them because there are a few entities that we're not going to touch on. We're actually going to touch on the few of the more popular. And a limited liability company, what it does is, from a legal standpoint, it separates you from the business. You are now a separate entity legally from the business, and this one requires a little bit more paperwork to get it set up, and you set this one up with the state. But again, Rod mentioned LegalZoom, great spot. QuickBooks or Intuit has My Corporation, which is how we set up our original company, and it gives you that separation. So again, if you're a landscaper, for example, and you are cutting down a tree in the front yard of a customer, and that tree falls over. We've all seen those ridiculous commercials where the tree falls over and hits the neighbor's house or the neighbor's car, and let's say they happen to drive a Mercedes, and that thing slams the top of the Mercedes and does $60,000 worth of damage to that car. If you are a sole proprietor, your insurance is going to cover some of that, because insurance is part of that as a sole proprietor, just to add in a little bit. Make sure you're well insured. But as a sole proprietor, your insurance would be your only protection in that case. And then on top of that, you're stone cold held accountable for that action. Believe it or not, as an LLC, your business and you are separate, so it kind of protects you a little bit in that respect as well from a financial standpoint, and your insurance as well. Both of those adds that extra layer of protection to you. So that's where the LLC stands in. Now,
so just sorry, go ahead.
Go ahead, Noah. Go ahead.
No, I was just going to throw in there, with the LLC, just to kind of give a little bit more definition for that. The LLC really, what it really does is it protects your personal assets, so that
absolutely,
if something happens within your business, God forbid, like Paul was saying, a tree falls on the neighbor's house, and they decide to sue you for whatever reason, they can sue the company, but they can't attack your personal assets, so your primary residence and any of those things that you have acquired from, that's considered personal assets. So
right.
That's really the power of some of these other entities, over the sole proprietor.
Right, and again, a lot of that is making sure that the things are set up right, because again, guys, attorneys are scum. So
yeah, and it's all about record keeping. It's all about record keeping.
They're going to do whatever they can to break that corporate veil and get to your personal assets, because it just makes it a little bit more likely that you're going to pay them. So again, make sure this stuff is set up correct. But you're absolutely right. It's really to help protect your personal assets and separate your personal from your business assets. Absolutely.
Yep.
Now, from a tax standpoint, folks, an LLC, the one reason that a lot of starting business owners use this is that your income tax flows through to you personally. So let's say you have an LLC, you do $100,000 in sales, you have a $50,000 in expenses, so you net $50,000. That there's no corporate tax. That $50,000 flows through to your personal Social Security number, and you are now taxed on a personal level. So that's the first way that an LLC can flow money through to you. Now, we're, again, guys, not going to get too much into exactly how it works, but you can also be taxed as an S corporation, and you can also be taxed as a C corporation through that LLC. And I don't want to get into that too much, Rod, because we're talking a little bit more complexity that would take a little bit more than a quick half-hour show to explain all that. But,
and I think that just, in general, I mean, if you guys are, starting to, make in the 100,000 and above, then, talk to your attorney or your legal on, or even your accountant, either one on, and let them kind of help you decide which is the best way to go and, what the benefits and stuff is. We're just kind of trying to help you, kind of give you an idea of what, what the most common and some of the best, some of these give you a little better tax breaks and others, over others. So obviously the LLC is just, it's kind of a pass-through. It's very similar to the sole proprietorship. Tax-wise, it just protects your personal assets. The S and C Corp definitely have some different tax advantages once you, start making, a pretty good gross income, and those are, and your tax attorney, either your tax guy or your attorney or both could, help you steer you on which is the best way to go.
Right. They're gonna tell you there's usually a set point where they're gonna say if your net profit is, let's pick a number 50K plus. I think that's something I've heard before. Then you should go to a S corp, and if it's 100,000 plus, you should go to a C corp. And again, don't run on those numbers, but it's going to be something like that. And again, that's why you should seek the advice of an accounting or a tax professional, because they would be able to help you out on that.
Yeah, because, and you're never going to hear the same answer from two of them anyway. So they all have all have their own things. So you just
very rarely will we do that. Right? Absolutely. Yeah. So, what was I going to say? And they'll all have a different way to approach that. They're all going to have a different opinion on that, but at least you've got somebody who can help you make a decision and sit down with you, and they will explain, okay, why you should go here, why you can go there. Now, a lot of it is because setting up the next couple that we're going to talk about has a lot higher expense. An LLC, probably what, Rod? You can probably get it up and running for I would say between anywhere from $200 to $500 for the setup, somewhere around in there. If you're doing it yourself, legal Zoom, something like that, right?
Yeah, I think when I did mine in 2010, it was like, and it was either just under or just over 300 to get everything set up.
Cool.
So it's for what it gives you, I mean, it's dirt cheap, really. Right. In my opinion, anyway. So.
Cool. So enough on the LLC. We'll move on to the next one. And the next one is an S corporation, or you'll hear people call it an S corp. S corp, very similar in tax wise, very similar to an LLC. And to be honest with you, I don't know from a legal standpoint the bigger difference between the LLC and the S corporation. To be honest with you, I think they're very, very close to similar as far as the protection, as far as asset protection. You know the difference really between those two, Ron?
Yeah, I think I don't remember which is which, but one of them is pretty much just kind of like a pass-through type of taxable income, where the other one is. So in other words, if you profit $100,000 that year, but you only take out $30,000 in salary or something, I think you're only taxed on that. The other one, there's tax based on the corporation as a whole.
Right.
And it has different benefits. So it's
S
Yeah,
corporation, I think you can have more. You can have actually more owners as well. You can have up to I think 100 shareholders or something like that. You can separate the company out a little bit different. So if you have multiple owners or
yeah.
something like that.
Yeah, and even with the LLC, I mean, I have a single member LLC, but you can have, I think, up to 15 members that have a percentage ownership on an LLC, and then
Right.
you can, you know, and
Right.
then there's also, like you said, there's limited liability partnerships that,
Right.
you know, it's more or less the same, but just slightly different. So.
But tax-wise, both the LLC folks and the S corporation has that uh, pass-through income. So there's no corporate tax on that S corporation. It just passes through. So
Yeah.
we'll run into this next one quick. We're actually getting close on time, bud.
Yeah, I know. It's amazing how fast it goes, isn't it?
Absolutely. So the last one, and this is going to be one that you see a lot of the bigger companies, guys, the Cokes, the Pepsis, and not always, because I believe Domino's is an LLC, I heard at one point in time, and I thought that was interesting that a big company like that was one of these other, kind of sort of quote unquote lesser entities. But a C corporation. Go ahead.
No, I was just going to say, I think it just really depends on, you know, the tax attorney that you have and what their thoughts are on them, and that's really a lot of these big corporations. It's,
Well,
it just depends on your business model,
Right, and it has a lot to do with ownership. Like maybe it's owned by one family,
Right, sure.
It's more than a publicly held company. But I think
Yep.
I thought Domino's was publicly held, but the difference here, and guys, when you run into a C corporation, now you're talking about having to keep corporate minutes. You have to have, and as you go up in these from number 1 to 4, you tend to run into more paperwork. And the C corporation is a lot of paperwork. You have to have meetings on a regular basis. Those meetings, the minutes of those meetings have to be recorded. The process of setting it up is a lot more difficult. There's just a lot more paperwork, and the thing that really bothers a lot of people about the C corporation, and this is where you have to be into an income level that it makes it worth making the changes to your tax that you have to do, is double taxation. So basically what happens in a C corporation, in most states, and some states don't have it here, we don't have corporate tax in Nevada, but at least on a federal level, if that corporation makes $1 million net, for example, after expenses they make $1 million, they're going to get taxed on that $1 million. And then as the dividends are paid out to the owners, those owners are now going to be taxed on those dividends as well. So that's where you'll hear people say, oh yeah, the C Corp has double taxation. That's what they're talking about. They're talking about the fact that the company itself gets taxed, and then the shareholders and or the owners of the company, they get taxed on their personal income as well. And as a smaller business owner, you want to try to avoid that as much as possible because it can run into a lot of money. Now, there are ways that are, again, far beyond this talk today that can really be an advantage to having a C corporation. But again, we won't run into that today. But that's the biggest.
Think, Donald Trump type stuff, I'm sure, are all C corps and stuff.
Again, your accountant or tax person will say, okay, here's where you need to go into that C corporation. But it's also some of the best asset protection, when it comes to them trying to pierce a corporate veil to get at your personal assets. This is the best, one of the best ways to protect your assets itself.
Sure.
And then the last one is partnerships, guys, and there's all kinds of ways to do partnerships. There's LLPs, limited liability partnerships. There's other types of partnerships. I'm not really familiar with them. You'll find partnerships used a lot more, I think, in like real estate than you would like a small business. Partnerships as a whole, guys, are a nightmare. Partners are tough in business. You want to make sure that you're really with the right people if you're going to form a, like a 50-50 split or a 25-25, where there's an even split of the partnerships. You got to really have your ducks in a row and have a very good operating agreement put together if you're going to run a partnership, because you just need to know that everybody's going to do what they said they were going to do when you got together, and continue to do that. Because what happens, Rod, obviously you get four buddies that get together to put a bar together, and they're going to run this bar, and then the next thing you know, the bar gets open and one guy's sitting there drinking all day while the other guys are doing all the work, and then one guy's doing all the accounting and the other guys aren't doing anything but pushing a broom. So you can run into all kinds of issues with that. You got to be very, very careful with partnerships.
Oh yeah, absolutely. I mean, partnerships are, they can be the best thing and the worst thing, just like
like marriage.
Else. And, yeah. Well, I was trying to stay away from that one, but yeah.
Yeah, honey, I don't mean that. I don't mean that. If you're listening, Lori, tonight, then I don't mean that. But those are the basic business entities, folks. It's a great way for you to get started, anyways. And we're gonna pop out. I'm gonna pop out of that for just a second, and we'll come back in with you guys.
Come back to your smiley face.
Come back to my happy smiley face. But it's a phenomenal way to get started, is using that sole proprietor to get your business up and running. If it's something that you've been wanting to do for a while, hey, dig in, man. At least get started. That's really the most important thing, is not get too hung up on what we talked about tonight, but to get started and get your business up and running.
Yeah, and you can find all the definitions for each of these on the IRS website, on your state website,
Absolutely.
on a basic Google search. Just that's kind of why we really kind of recommend to talk to your tax person or your attorney, because the internet is full of good information, but it's full of a lot of bad information too. And the last thing you want to do is follow somebody's directions that's leading you down the total incorrect path, because that happens.
Absolutely, absolutely. So we're getting close to calling it a night, guys, but what we'll probably do tomorrow night is we're going to talk about taxation, and we're going to talk about some of the advantages, guys. What people don't understand is, and Rod and I talk about it a lot, is you'll have people complain about big business getting these tax advantages, and how the IRS is here to screw the little guy. And to be honest with you, that's not true. It's just bad mentality. The IRS system, the tax system, was not put in to penalize the employee or the little guy. It was put in to reward business. It was put in to reward people who are creating business and creating income and creating jobs for the country. So you need to use that tax system to your advantage by owning a business. It's there and was written so that people would start enterprise and keep the economy flowing. That's what it's there for. There's very little in the tax code, to be honest with you, Rod, that is in there about penalizing anybody. It really, the tax code, it's literally thousands and thousands of pages of benefits for the business owner. And people just don't understand that and don't make use of that. And operating a small business from your house is one way that they can take advantage of that. And give them a couple little nuggets for tomorrow. What things that they might be able to write off on their taxes?
Oh my gosh. The two biggest is your home office and mileage.
Right.
Down.
Right.
I mean, those are the two biggest write-offs, period.
Absolutely. Your home office, I'm sitting in my home office now, and if you've got to decorate your home office, or your computer, if you're doing all of your business on your computer, the cameras that we use, all of that stuff is write-off. And what was the other one?
Your mobile phone, your internet connection, I mean, those are all direct expenses that you can now write off as a business expense.
As a business owner, absolutely, absolutely. So one thing I want to show you guys before we go. This is a recommended read by Rod and I. Rich Dad Poor Dad was one of the best-selling personal finance books out there ever. I mean, really, literally ever. It was written by a man named Robert Kiyosaki, and it talks more about kind of the mindset of business owners, mindset of rich people versus poor people. and it is a fantastic read for you guys that are maybe on the fence about business. You maybe have that weird thing about, you know, all rich people are bad, because that's how they are portrayed in every friggin' movie on the planet, is, you know, the rich evil guy, with the exception of Batman, right? He's a good rich guy.
Yeah, definitely.
So most of the time, though, they're portrayed as the evil land baron or whatever.
Yeah. Yep.
And so it's been implanted into our heads since we were kids, about the you know, the evil rich guy, or the you know, you see a guy drive by in a nice car and people are like, oh, you know, rich a-hole or whatever. For me, when I see someone drive by in a really nice car, or I see a really nice house when we drive by, I'm like, man, how did they do that? How did they, what business did they start? What were they thinking, and how did they get there? And that's a lot about what this book is about. This book is about changing your mindset about rich versus poor, and changing how you think from a mindset of not being enough, money doesn't grow on trees, and all that kind of stuff that we were programmed to believe as kids, to an abundance mindset where there's enough to go around for everybody. And trust me, ladies and gentlemen, if you build a business and you do it properly, there is enough to go around for everybody. And as you create a business that blows up and creates a lot of income, what are you going to do, Rod, if you have a lot of money? You're going to go spend it.
I'm going to go spend it, yeah, and that, you know, generates economy. So.
And the economy turns. That's what makes the economy turn, is people making a bunch of money and going out and spending it in the local market. There was a show on the other night. Tony Robbins was interviewing Mark Cuban, T. Boone Pickens, the big oil baron, and Steve Wynn here in Vegas. And Cuban said something that really hit home to me, and he said, the most patriotic thing that you can do as an American citizen is get filthy, stinking rich and pay a lot of money in taxes. And that was kind of, I was thinking, man, that's a cool way to look at it, because not only are you going to pay a lot of money in taxes, I'm going to go buy an extra car or something in my local market. You're going to go eat at nice restaurants and spend a lot of money in your local market. You're going to buy more tires in your local market, or wheels or rims for your car, or a boat, or you know, you're going to stir the economy because you have that money. So really, when I change my mindset to it's kind of my obligation to make as much money as possible and go spread that around, that really helped me a lot to understand better that, hey, not all rich people are jerks.
You know, and hey, you know what? There's a lot of fun in spending money too. You know.
Oh, absolutely. I like Rod. I can't picture you. You know, I will never picture you, no matter how much money you have, as a rich jerk. It's just not going to happen. Having a lot of money just makes you more of what you already are. So.
Yeah, absolutely.
That's the bottom line.
Just a kind of a quick tip for everybody out there. If you're thinking, oh my God, I can't afford to start my own business, you know, there are more people that are successful business people that were dead ass broke at some point in their life than there are people that have you know, that have had money that have just continued to gain it. There's just you know, there's just seems like there's a lot of you know, when you have a little bit of something and you lose it all, or something happens and you get dead broke, and it just really puts some fire in you, and those guys become even more successful. So, you know, you can I remember when I started my first business in Selma, I don't know, back in 90 something, 80, so actually in 88 I think it was. I started with like $1,200 in my pocket, and the monthly rent for the place I was renting was $600. So $600 of it went to rent, and I had $600 operating expense, and you know, and I had that business for about 4 or 5 years before I ended up doing something else. So you know, to say that you can't start a business on on basically nothing in your pocket, I can prove you wrong because I've done it.
Right, right. And a lot of times it's a better way to go. And I know we're running a little long, but this is really important for people to understand. A lot of times it's a better way to go because you have to be more creative in how you build it.
Sure.
Sometimes there's people, I mean, there's people all the time, Rod, that start a business with a boatload of money. They have a lot of money to throw at it. They build a really cool restaurant with a badass storefront on it, and they spend all this money, and that thing closes in 6 months.
It closes in 6 months because they have all this money and they're just cruising and they got no creativity and no, sometimes they don't have a lot of drive to keep that up, and that money can go poof in a hurry, let me tell you.
Right, and they really didn't develop. They had the money, but they didn't have the skills to run the business
or the plan.
And you gotta have that stuff in place. And like you said, when you start off, you knew, okay, in order for me to get to next month, I've got to do something to make some money, to do whatever I've got to do to get to that next month. And sometimes that's a lot better than having just all this money to throw at something and then not having a plan on how to get past once that money's gone. And once it's gone, it's gone. You still have to bring income into your business in order to make it work.
Yep, absolutely.
Cool. So guys, we're gonna put once this is recorded, there'll be a link on the book so you can see where you can get that from us, and also down in the description below. So we'll get that recording up and running here probably within the next. Well, it'll be up tomorrow morning for sure, and you can go through and buzz through any of this that you missed. And that's it for tonight, guys. Tomorrow night in episode 3, we will talk about some tax stuff, and that's actually really fun for me. It's really kind of a great information for people to know, because again, as you're getting started, the tax advantages really kind of help put a little bit of money in your pocket at the end of the year.
No, absolutely. And especially for you guys that are if you're starting a business now, doing it part-time, and you're still working a full-time job, I mean, it really, really helps with getting some of that money that you're paying in as a W-2 worker, back in your pocket at the end of the year, too.
Right, it offsets that income, absolutely, and it's a huge help. And guys, when you see what we've got going for you tomorrow night, you'll see that it can be a matter of $2,000, $3,000, up $5,000 a year that you will save in your taxes. And for me, it's like, if you can save it, why not?
Absolutely, absolutely.
Take advantage of it.
The code's written there for a reason. Not just to look at it, but to use it.
And you might as well use it. Absolutely. Absolutely. It's like driving 50 in a 75 for me. Hey, the speed limit's 75, I might as well go 75.
That's right.
It's written for me to use it. I have no idea what that has to do with the tax code, but
it doesn't,
but
hey, whatever. So anyway, I just want to thank everybody for joining us tonight. And make sure you connect with us on our Facebook page. So theeveningbuzz.com will get you right to our Facebook page. And throw some comments in there if you enjoyed the show. If there's anything that you want us to cover or talk about, throw it in there, and we'll look at doing that in a future date.
Absolutely. And tell your friends. Tell everyone. Join us live.
Right. Join us live.
Cool. Rod, thanks. Pleasure as always, my friend. Good talking to you tonight, and we will see you again tomorrow night.
Okay, sounds good. Thanks, everybody, and have a great rest of your evening.
Thanks, guys. We'll see ya.